Samir Arora, founder and fund manager, Helios Capital, has been thankfully very patient with us today. He's been waiting for the last 3 or 4 minutes patiently for us to finish this interaction. Samir, apologies for that. Thank you so much for waiting by. Good morning. This is Neeraj here. I would want to talk about the markets as well with you, Samir, but since the Maruti numbers are just out, we've been talking about the GDP numbers that have come out yesterday and how companies by and large have been able to beat the Demon Blues. This time around a bit of an aberration for Maruti, but broadly, is this a space that you think will continue to churn out numbers month after month, quarter after quarter?
Yeah, absolutely. We own the stock, and I didn't even know what the expectations were, and neither have I bothered to look what the actual number is, because these monthly things are not our main concern. In big picture sense, it's a good stock in a good sector in a good country.
Samir, good morning. Tanveer also joining into the discussion. What Neeraj and I were particularly highlighting is that we don't recollect in recent history where Maruti has ever missed estimates. It's a small miss, but even so, given that the market was working with 1.4 lakh units for Feb, it's done about 1.3. Even so, your outlook on the stock remains?
Yeah, we are not going to even have a discussion internally that what was the reason or the number. Because first thing is, please note, from where do these expectations come? You really believe that an Indian analyst sits and knows what should be Bharti's revenue for next year coming from 15 African countries, one Indian country, and what will be the profit? These numbers are all guided towards a certain number, and I think we overplay these expectations, particularly on monthly or quarterly basis. So don't bother over all these things.
But for a stock which
for
is
not only Maruti, not only for Maruti, but any of these companies, unless there is a shift down or a shift up because some major thing has happened. For example, in retail, because I own some US stocks, so I follow US market also quite a bit personally, that is. And suddenly they will say that there's a massive shift towards, say, online retailing, and therefore people are not going to malls, and that is like a shift which you can imagine will be a secular thing for many years, maybe forever. Those kind of things where, although it may come at a quarterly result announcement time, are something for which you have to think. But if you think that some number was supposed to be 140,000 and became 138,000, who cares?
But at 6,000, roughly around that mark for Maruti, do you think that a large part of the growth story is priced in, or we are in a market where growth comes at a premium, so no price is really expensive?
Actually, that is part of the story, that we are looking for secular growth stories because India is growing, and within India you can only find some stories which you can imagine on a big picture sense that these things can go on for a long time, and B, that in that space you have a big competitive advantage, whether it is size, whether it is brand, history, comfort of the consumer with that company or its service or other things. And everything in India comes at a price. Unfortunately, if you look at, I personally own Disney and Google and all that. If you look at their valuation, you will fall off the chair and sell every Indian company, because those companies doing so well have 20, 25 multiple, and in India, if they were to list, they will have 40s and 50 multiples. But that is the way our market is, because on the other side, we have very poor quality companies. Maybe the universe is so divided in India that whatever is good and has some consistency gets a big premium, and so we live with it.
Wow, you're sounding more and more like Samir, that given a chance, you would buy more of the Western world companies as opposed to Indian companies.
In my fund, I can't do, but personally, I enjoy buying US companies. Yeah, they are very different from Indian companies, but there are two sort of parts of the brain of the same part, but doing two different things. One on a personal out of interest, and one is we are in India, but India has also done well, there's no question. But you can't compare some of these companies with the US companies, they are very different.
I want to ask you about a sector, but Tanveer has been dying to ask you about that, so I'll let Tanveer ask that. Tanveer, you want to talk to Samir about aviation?
Not dying, but we've been discussing this over the last 2 days. The number of sound bites after Warren Buffett's annual shareholder letter for 2017 was out, Samir. The number of sound bites that we've got on aviation, and the conviction that there is within the Indian aviation sector, Indigo, Jet, SpiceJet. I mean, the stock rally is telling the story. It's just interesting. It's almost like
Yeah, but
people are just waking up to the sector right now.
no, no, basically, the thing is that what Warren Buffett does obviously is followed by everybody in their own market, and they try to correlate some of the common factors. I don't think all the factors are common between our market and theirs, in the sense that India, the premium might be for somebody trying to grow very hard, whereas in US the way it looked is that he's looking for discipline. In India you can't have discipline. You look at a I don't know 300 million market cap company saying that we want to order planes worth $30 billion. I mean, and then that may be insufficient. So in India, you will not be rewarded for discipline. You'll be rewarded for growth. And Mr. Buffett is not buying it for that kind of growth, but saying that there will be discipline. So you can't blindly copy that here. You can only take away one line for which Mr. Buffett himself will say he has no view, I mean, beyond a point, because he said that oil prices will remain in range. And he himself says you can't predict commodity prices. So don't overdo it, but it's okay. I mean, that is, we are not moved by that.
Yeah, but I take on board that point. Just so difficult to predict oil. However, related subject, Samir, and thus my question. Sorry, you are making a point,
No,
Samir?
I'm saying more than oil is the fact that the reason why he did not buy these companies before, airline companies before, was, and he kept saying it in all his previous letters of some of them, that because the capital required is too much, the fixed cost is too much, and now it looks like a cozy cartel there, or maybe not cartel, but everybody's following the same playbook, which is to have discipline, to not overdo, to maybe run with higher capacity but not buy order more planes. Whereas in India, you see it in the size of the company and the size of the order. Do you really believe that the US company has accepted an order from an Indian company for $30 and $40 billion with a market cap of a few $100 million? I mean, obviously these are just different games that are being played in our country.
Samir, a related pocket. Have you been disappointed with the talk the last couple of days about merging oil companies? I mean, essentially well-run, re-rated downstream companies with something which is not quite, hit the high pedestal in terms of, performance, company performance and stock performance, that is ONGC. Is that a disappointment?
It would be a disappointment for people who own the stock. We never own these kind of stocks. But that is the reason. If somebody can even think that this is a good proposal, you know what kind of thinking we have. It makes no sense whatsoever according to us.
Okay.
It's a short answer.
Yeah, and a pointed one at that.
Pointed one at that, yeah.
No, because the point is, you will transfer it from the government to ONGC, and instantly 20 seconds after that, ONGC will be valued by the market with a massive holding company discount on if they own HPCL, for example. And because HPCL is still public, whatever you want to take up from HPCL to ONGC in terms of dividend only you can take, which anyway share of government ONGC will get. But you can't do too many things if both the companies are public and separate. Because if you think that merging this means that the company's earnings are more stable, I mean, who's valuing that? There are two different companies, both owned by government, and maybe people like, one part or the other. And you will not be paid a premium because it will be too much to expect ONGC to pay a premium to the government to buy HPCL shares. That would look like a internal, stripping of cash from ONGC. So the shareholders of HPCL can't get a premium, but they won't lose anything much, I think. But the ONGC guys will have a holding company discount. So it's all. And what is the end game? What is the end purpose? If the end purpose is show to the world that we have large companies, for what game? To get into some Fortune magazine list. Because anyway, they can do things together. They all have a big common shareholder, so if they want to bid for oil fields or God knows what they have to do, they can anyway do it, or you merge. But owning shares has no meaning. That's it.
Yeah, got it. Fair point. Samir, what about your buying list right now? Where is it that you're finding value in the market? On the sidelines, and the reason I particularly ask you that is because, suddenly there is a lot of interest coming into aviation. So, are you keeping the conviction with the high growth names? Add to that, what about an underdog like real estate? There's talk about DLF signing its deal.
I tweeted a few days ago that the way the Indian system is, where you're not supposed to talk about anything other than just waste everybody's time. How would Warren Buffett, how would he have said that he owns Apple? So he would have said, if he was an Indian fund manager, so you would have asked him, what have you bought? So he'll say, I can't give you any names, but I bought this company that has the name like a fruit and which normally keeps a doctor away, but let's not be specific about anything in life. So that is the way the Indian system and regulations have emerged. So let's talk big picture. So big picture is we are not buying real estate, and particularly Delhi-based real estate, and particularly deal-based real estate, and particularly real estate where the value is being actually technically being the investment is being made or being sold by the promoter, not by the company. So the benefit to the company is that after that promoter will buy stock in the company. And we don't believe that it is in the promoter's interest to buy this stock at a high price because he is selling, not DLF. So all this confusion that you guys have and basically misrepresentation is that some foreign investor is coming and buying a stake in DLF or buying DLF's real estate. He's not. He's buying DLF promoter's share. That's it.
I'll read out that tweet.
And then subsequently, the promoter with that money is going to, whenever he settles it and when he has paid his taxes, with the balance money, will buy effectively a QIP of DLF. So we are excited that DLF will have a QIP. Now you tell me what sense does that make for anybody?
So I'll read out that tweet. Samir Arora on Feb 27th said that if Buffett was an Indian FM, he would probably have said, and Samir, correct me if I'm reading it wrong, but I think that's what he means. I can't talk individual stocks, but I bought loads of this one company which has $700 billion market cap. No names, please. I think that is the tweet that Samir was referring to.
So I made another one for you because I thought, let me not repeat the tweet. But it's the same thing. Somebody else would have said, I bought this company which has a name like a fruit and which normally keeps a doctor away if you eat it or something like that. So let's talk in those words for anything in India.
True. No, I agree. Okay, but let me talk. My final question to you, Samir, for the session today. And it is on a tweet that you mentioned, and I think we can talk about it, about buyback. I won't get out into the whole tweet, but you've used the term buyback in one tweet about 5 times. I'm guessing you're referring to IT. Now, my question to you is, does this in any way change an investor's perspective towards Indian IT? Or do you think that for now, it remains as it is?
No, I think that buyback per se makes more sense if you believe that the company is very bad, that the promoter is very bad, and that maybe he doesn't even have the cash. But look at it differently. If it's a regular good company and many people say, oh, as soon as you buy back stock, your ROE will go up. That is because you have assumed that the investor looked at it by looking at ROE. Whereas I may be looking at it like this, saying that in a $100 price or a value, because price is different, that 90% comes from the business and 10% he has cash. Now, because the cash is with him and not with me, and because he doesn't seem to have found a use for it, I will give him value of 7 for it, or 8 for it, or 6 for it. And if he's a cheat, maybe 0 for it. But how does it change my valuation for the balance 90? So if he gives that to me, that 10, and if my stock price goes up 10%, does it mean that I thought that because this company is so bad, that if they keep this money, I should write it off in my books, in my mind, in my thinking? So it doesn't change what happens to the 90, but the way the market interprets and many analysts interpret, which I think is 100% wrong, but that is because that's why they are analysts, because nobody has told them how the world analyzes, because nobody knows. But to say the ROE of the business will go up. ROE of the business goes up if the business does something different. Not because you thought of calculating it with the cash. Who asked you to calculate it with the cash in hand? So I don't think it changes anything other than a pop of some kind, because money in my pocket is better than money in your pocket, and therefore that much, yes. Other than if it is in Berkshire.
As usual, Samir, at your candid best, and you always get us thinking after an interview session about, okay, how should we be looking at the market and individual investment ideas. But great to have you this morning, and thanks very much once again for taking out the time.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.